All right. Hello, everyone. Welcome to another podcast episode with myself, Jeremy, and I have a special guest on today's show, ozchen. And Oz, you might have seen his episode with us earlier on my channel about financial freedom and financial mindsets for financial freedom. But Oz, I'll just kick it over to you to introduce yourself again.
Hey, I'm Oz, and like Jeremy said, I'm really into financial freedom and talking about the psychology of money. I'm really excited for today's topic. I feel like every time friends get together, one of the topics that always come up is the housing market and real estate and people trying to buy a home, or should I buy a home? When should I buy it? Can I make money from it? So this is such a evergreen topic, and I'm excited because I think we both have different perspectives and useful mental models for how to approach the real estate market.
Yeah, I mean, the reason that we also decided to do this episode is because, Oz is a property owner. I am recently closing on property on the East Coast, and this has been on my mind. So, one thing we could do, I think that'd be kind of helpful, is kind of talk about our real estate journey. Obviously, mine is more recent, but I will punt it back over to you, Oz, about what you want to share about your real estate journey. What do you do? Like, how did it turn out, etc.
Yeah, so I live in LA and I basically live in the house that I bought. And this is the end of 2015. So basically, let's just say 2016 was when I got it. Time really flew. At the time when I bought it, I didn't have the thinking and all the advice that I would give now. And why I bought it was because my mom's in real estate and she pointed out this property to me. Asian parents are often really bullish on real estate. It's something tangible, it's something that they understand. I would say, at least for my mom, she understands that more than the stock market, whereas I'm actually the opposite. And in the beginning, when she was saying, hey, you should buy this home because it's probably like the only one that you'd be able to afford at that time. And she was right. And I kind of made the decision on a whim at the time. And it was only because I liked that it was close to the LA metro and I liked the option to not have to drive. And since this house at the time was cheap, it's in like a growing area. It could be kind of sketch sometimes. It's right off of the metro line. I've seen a lot of activity on my street. Actually, a lot of people have sold their homes and new buyers have moved in over the years. So it's kind of like a slowly gentrifying in the path of progress type of place. But basically, that's where I live. I'll throw it over to Jeremy as to where your journey is with real estate right now.
Yeah, yeah, very, very fresh. Finally, at the age of 35, I'm soon to be a property owner. And not just, by the way, it's not just me owning the property. I'm actually buying it with a friend. So I'm basically like a dual property owner. And it's actually not in California or around Los Angeles, namely because I can't afford the prices here, quite frankly. It's all the way in the East Coast in New Jersey, right next to New York area. So buying out there has been a little bit more affordable. However, in that area in Jersey City specifically, the property values have been rapidly increasing as well. So I kind of noticed that if I want to be close to New York, if I want to kind of be able to commute to New York or just like visit New York, obviously buying property within New York itself for the price of this property in Jersey, I would get like a one bedroom. For me, it was more recent. It was honestly a bit impulsive. And the main reason behind why I was buying property, namely, was because the price was in my range. I also initially had two other investors. So I was thinking that the down payment and the closing costs would be split among three people, which is very doable. And I thought also it'd be good to diversify my assets into some real estate. However, one person dropped out, so it became down to myself and my friend to really, cover the closing costs and the down payment. So that's kind of been my journey. Actually, the closing still hasn't happened, so I still don't officially own it. But I am very new to the real estate game, and I have a lot of optimism about it, but also a lot of concerns around it, which we'll talk about in this episode. So that's kind of more or less how my real estate journey has started to unfold right now.
Yeah, just to level set a bit, I think the last time I saw average home prices, like across the entire nation. So this is a very gross average. I think it was something around $400,000 for a single family home. Definitely less, a lot less than what you find in big coastal cities. i.e., like expensive cities like Los Angeles or anywhere notable on the coast. In Los Angeles, I would say that the average feels like it's $1 million for a single family home. However, it really depends on what neighborhood. So, like in my neighborhood, it's more like the 700,000s for a single family home. Obviously, it could flex up or down a little bit depending on the condition of the property. And LA County is so big that, like, for example, if you are even a little bit west of, like, close to Culver City, which isn't even at the beach, but it's like Culver City is like kind of a tech hub now. Even if you're a little bit close to Culver City, you will see nothing under $1 million for a single family home. I think for apartments and condos, you might find things that are like 700, $800,000. And like anecdotally, we've personally had friends who've like bought a condo for $1 million, you know? So that's kind of like the climate, I think, for a lot of big cities. But what were like the prices that you've been seeing for your deal?
Yeah. So for me, Jersey City actually, like, yeah, it's kind of interesting because there wasn't like a huge differentiation or a huge gap as I expected between single family homes and apartments. Because originally, actually, my friend and I were looking into like 2 bedrooms or like 1 bedroom that we could renovate. But with single family homes, we noticed it's like from 500 to like 7 to 800K. So there's definitely a little bit of an overlap. We bought the
Hmm.
home for around 650 approximately, so that's pretty reasonable, I guess, according to the market. So wasn't crazy. So for like Jersey City homes, specifically close to Hoboken area, but not exactly that area, it was around, I would say, probably in general, you're looking at like 600 to 700K. But this is before renovations because there's actually a lot of listings I noticed on Zillow where it was like 800 to 900K, but these are all flipped homes, right? They basically renovated it and they were trying to like flip it
Oh,
and sell it. So that whole area actually
so
is pretty
basically,
hot.
so was that one of the key things that makes you and your friend go in like, hey, we could flip this, and whether we keep it or not, if we fix it up like these other homes that we see, it's going to be worth 150K more or 200K more,
Yeah,
however long you hold it.
exactly. That's kind of the way we were approaching it. Actually, this kind of touches on a good point because I was running the financial. I was talking to Oz about this. I was running the financials, and it doesn't look bad, but it's not completely green with the cash flow. Basically, I have to pay a few hundred out of my pocket every month to like, cover the mortgage and property taxes with my friend. But the reason why I bought it is because this whole real estate market that I bought in the past decade, the appreciation on the property has been around 5 to 7% on average per year. The past 50 years is 3 to 5%, so that's around 4% average, which is pretty standard. But I was thinking, okay, let's say I buy this property and I'm paying a few hundred out of my pocket per month, and it's not great financially, or I would rather just sell it. There is an off ramp of like selling it in an appreciating market, so chances are I would get a little bit of profit. I would probably, unless the market goes really, really bad, I would probably just recoup my losses or recoup my money. So I was thinking there's like a little bit of an off ramp, but our whole point was to just hold it and have it appreciate and see if long term we can make it work with rentals. But worst case scenario, chances are we could just flip it and sell it for a profit from the actual like selling price.
Hmm.
So there are a few options on as to how I consider whether or not I should get this property. But definitely being able to flip it and renovate it was pretty huge because my friend, he's flipped a few properties. He's made pretty good money from flipping properties. I'll put it that way. So if he was pretty confident about this property, I felt like this is a good property to go in. The other thing actually is, as of the time of us filming this episode, it's December of 24. And usually during the season, I heard this is usually when people are like too preoccupied with the holiday stuff to actually like really bid competitively. So we actually thought right now would be a good time to buy because chances are there's not as many offers on the market or there's not as many offers for that property. And that actually allowed us to get the home around, I would say, 8K below the listed price on Zillow. So the reason why I also decided to pull the trigger now is because the season actually matters a lot. Because I heard usually, when it gets around February and beyond, people get very, very active with looking for homes, and the prices will probably go up because more demand goes up, and then obviously people raise the prices. So the reason I bought in the season was really to also save money because generally speaking, for the property I bought, just to blab on about it a little bit, it was around for 650, right? Is the listing price, but the previous offers that we heard were around for like 610 to 620, and the sellers rejected it, right? But that was kind of just showing us that if we went in with a pretty reasonable offer that the sellers would accept, chances are we could get that property. And a little bit of a story, literally the weekend we made the offer, a person or an entity, most likely a company, offered 650 all cash for that property. So we were able to actually lock in the property and get it through. So from our perspective, if someone's willing to invest in that all cash, chances
Wait,
are
you're saying someone else came in after they accepted your offer.
yeah,
Okay,
basically
so
they
you
were
were able to get it below the 650 that they were.
correct. But then someone else came in and offered all
Okay.
cash, and our lawyer was able to basically lock us in as buyers over the weekend. Without her, we would probably lost the property, honestly. But that kind of showed that chances are, we are also doing some recon on this area, and this area definitely is, I would say, a slowly up and coming area. It's more suburban too, more families, not so much for like a Manhattan type deal, but a lot of people have bought properties there to make it into like short term rentals, long term rentals. So even when you look at Google Street View and you look at the property, you'll see on the street itself a lot of the properties are being renovated. So for us, this pointed to us like it gave us a lot of signals that it might make sense to buy in this area. Now, obviously, there's no guarantees; it can really turn out awry and be a horrible investment. But all these signals kind of made me a little bit more confident in getting the property.
Okay, very cool. I think there's so many more things we could dig into about your decision making with this property. Um, but I think that the general thing we're kind of answering, or the general question we're exploring is buying a home a good investment?
Yeah.
And how do you make it into a good investment? And how do you decide whether to do it or not? And so I think that, before this recording started, you were sharing something that's called opportunity cost, because the main idea is, hey, if you're going to take a bunch of money, down payment, obviously paying a mortgage, that, houses cost money. What is the alternative to that? If I'm locking up this money in this home and you have the goal of making money with that, the opportunity cost is what else you could do with that money to make money. And the other biggest class type of asset is stocks, or the stock market. So
Mhm.
maybe we could kind of banter a little bit about the difference between investing in stocks, how much money that can make, versus in real estate.
Yeah, yeah, that's definitely a very loaded question, but something I was very excited to talk about because, to be quite honest, too, like I was telling Oz this prior to us starting this podcast recording, is there's a part of me I was kind of framing myself as optimistic about buying this property, and I am, but there's a part of me where I'm also cautious because, for me to really just all of a sudden like drop a bunch of money to like buy this home, I've never done something like that before. So naturally, can you imagine if you like drop like say 50% of your net worth to buy something? Like I'm pretty sure any normal person who's never done that before would feel very like kind of cautious about it, right? And also like I bought this property with my friend pretty quickly, so it kind of felt a little bit rushed to be honest. But I would say this kind of points to the whole like stocks versus real estate debate. There are so many videos on YouTube about it. I've been watching all of them lately. But for me, just to give a little bit more a story as to the opportunity cost, what I literally did, because I am kind of like I don't work in finance, but I'm really good with spreadsheets and financial modeling. I literally kind of graphed out if I were to buy this home, how much money would it cost upfront, right? With the closing costs, down payment, all the other closing costs. And I would say if that money were to be invested in, let's say, my 401k or index funds with a standard rate of return, how would it look like 10 years from now, 20 years from now, 30 years from now? And I had so many different scenarios where I bought the property or just kept it in index funds. But I also had scenarios of flipping the property 2 years, 5 years, 10 years, 20 years, 30 years down the line, right? Versus just keeping it for long term rental. And I literally projected it out. And what I actually found from my projections is that keeping it in the S&P 500 or in index funds would actually give a greater net worth down the road. Now, obviously, this depends. Like maybe I sell the home and flip it in like 5 years for an astronomical profit. That could definitely offset, right? But I was just going off industry averages of the S&P 500 return as well as the return on or the average increase in property value per year. So what I found is I would recommend for people to always run the numbers, especially for like a big purchase like a home. I know speed is of the essence sometimes, especially in just like very hot markets, but I think it's really critical to know that there is an opportunity cost because a lot of times, there's people and I have friends that are very bullish on real estate and I have friends that are very bullish on like crypto and just like, index funds, which is fine. But people oftentimes will, if they're trying to convince you or they will share their perspective, they're going to share things that work for them and it might be more conceptual, like, hey, like stocks are more liquid. The S&P 500 has only gone up over the past 50 years or whatever it may be, right? And then people on the real estate side might say things like, like real estate's more active, but like real estate's always a good investment because you actually have something physical. And these concepts make sense, but I really encourage someone to really understand what are they trying to get out of real estate or just stocks and what do they value and to really run the numbers. Like, don't just like go off these theoretical concepts. Like, really actually run the numbers to see like which one would probably further my goals. Obviously, we can't predict the market. We can't predict the stock market. We can't predict the housing market. But I think it's really critical to just run numbers because I'll also tell you this, like, to add like a wrinkle to this conversation. Buying a home is expensive. A lot of people that run these napkin calculations of like down payment and like the broker's commission, there are so many closing costs. Like, no joke, literally, like when you get the mortgage loan disclosure or whatever, like you see all the closing costs. There's all these random fees, like clerk counting fees. Like in New Jersey, they have like a title metal lens fee. I don't even know what fee that is, right? There's so many fees that add up. So it's not just a down payment that you need to close in and like paying the commission, right? That's usually actually for the seller. But there are so many things that add up. And I think people that just run the numbers really quickly or don't really think about thoroughly, they could get into a lot of trouble financially.
Yeah. I think that the approach that you took, Jeremy, is really well reasoned and good. And I think a lot of people actually don't go through that exercise, even if they are just buying a home for themselves to live in. Like you're buying a home, a property, I should say, mostly for the purpose of investment and for this to work out as an investment. But I think the same thinking should apply to people who are interested in buying a home because so often I hear this assumption, which I think is a very costly assumption. And that is assuming that, oh, hey, if I buy a home, it's a good investment, right? The value would just go up. And that's that may be true, but it misses so many details because I would say that, well, I'm going to go on a little bit of a spiel here because I think that there's three types of property buyers. Like the first one is the emotional kind that buys because it's always been their goal and desire to own a home. Let's just say that's on one extreme. Okay, I've always wanted a ranch style home. I wanted to live in this area, and so it's mostly like an emotional decision, right? And that's totally okay. But so there are people in that bucket who want a home no matter what. There's people on the other far side of that spectrum, and we're going to call them real estate investors. And these are people who are trying to specifically make money from real estate. And they will go through the calculations that Jeremy's going. They would partner up with, they would try different strategies for funding to make sure that the economics work out for them. So it's more of like by the numbers. I think there's a third group of home buyer who kind of screw themselves over the most. And that is those who are just assuming that buying a home is going to make them money, but actually underlying it is a emotional reason. So they kind of like conflate all these things together. They're like, oh yeah, I'm gonna lose out so much money paying rent to my landlord. I might as well buy a home myself. And I really want this home. And oh, my home's gonna make money anyway. I think it's this group of people that probably are going to have a very nasty surprise because they're kind of conflating an emotional decision, which is okay, but with a logical decision that they think is they're definitely gonna win financially, which is like definitely far from guaranteed. And I would say that prices dictate everything. So obviously, if you live somewhere and you could buy a home for $100,000 and it's super cheap and it's actually like the same, if not less than the rent that you pay, then of course, like where you have a golden opportunity, you should probably, you would probably do okay buying a home. But I think most people are experiencing a really crazy real estate market, especially if you're living in a big city. Like most of the nation lives in a big city. This is how urban planning works. And in big cities, real estate costs a lot. So it's a very different picture. Like someone out in the boonies, maybe in a Midwest town that, the prices are so very reasonable relative to people's income in that area versus, and there are still opportunities there. But if you're living like in a big city, it's most likely that you have to try really hard for and put a lot of thinking into buying a home that costs that much and it making you money.
And out of curiosity, I think I remember reading on your website or a recent newsletter that you sent out for finance stuff, like you recently convinced someone to like not put money down for a home. I'm kind of curious, like obviously we don't want to disclose too much about your client, but I'm kind of curious about the thought process, what you talk this person through, and like how you notice their beliefs. Because I agree with you, like the person that's like, hey, buying a home is good. I don't want to pay money for rent when it could be going towards a mortgage. But it reminds me, there's a statement that I heard through all like the podcasts I listened to recently, is that your mortgage is the minimum that you're going to pay because there's so many costs of home ownership that people don't realize, right? For someone that's renting, your rent is the maximum. Now, I totally get it. Like, you have to run the numbers. Like, obviously, if you're paying like $8,000 per month for rent and you can comfortably afford like buying property in the area that you live in, obviously, it might make sense to buy property. But going back to your client's example, or just in general, like, what have you noticed about some of the faulty beliefs or some beliefs they had around owning property? Because, yeah, everyone that,
Yeah.
especially at our age in our 30s, right? Everyone's kind of like, I want to own a home. That's kind of like a life goal or a goal that a lot of our friends have and a lot of people in their 30s have and even 20s, right? And I think you can be from the perspective of the person that wants to buy a property, you can kind of be like a buzzkill if you're like the voice of reason saying like, can you afford it? Like really, what is the monthly mortgage? How much do you make? How much is the mortgage relative to like your monthly income? Like, are you going to be house poor where you're just basically like surviving just to pay the mortgage and the property taxes, etc.? So I'm kind of curious to hear like what your perspective has been in terms of helping these people.
Yeah, I definitely don't want to be a buzzkill. And I think the main thing is to be a conscious home buyer. When you do things consciously, it means you check in with both the emotional side and logical side and you try to align them up, right? I think it's actually better for someone who recognizes that and they're like, hey, I know this home is going to be expensive, but we could afford it. And I know it's mostly emotional. It's because I have family here. It's because I want to set down roots here. It's because I think I'm going to live here for a long time. And I'm just like, that's great. I think that person who's able to have that clarity is going to be far better off than the person who's like, oh yeah, I should get a home. I'm like in my 30s anyway, and I really should be a homeowner by now. And home prices are only going to go up. You're supposed to make money, so yeah, I'll buy a home. Like that person B, I would say they are subject to a lot of, I would say, psychological biases that aren't helping them. And one of those things is just simply run through the numbers and look at the history of returns of these things, especially like what Jeremy just said. Like the mortgage is the minimum that you're going to pay. Like, I have an old home and I have to maintain it. And there was a tree that was probably going to kill someone. And I had to, like years ago, one of the huge branches fell like right in the middle of the driveway. And that's when I was like, oh shit, if I don't cut this down, it's going to kill someone. I paid $5,000 to remove that tree. And that's just on top of everything else I had to pay: property taxes, mortgage, obviously utilities, and everything, right? So I think people who are in the person B camp of just buy a home, it'll go up in value, right? They don't see all these invisible phantom costs that are involved in running a home. And I think that if someone's so optimistic by ignoring those things, they're actually going to be less happy once they actually buy the home because they're going to be like, oh shoot, what a nasty surprise. So much more of my paycheck has to go towards this and all that. So I would say there's also a lot of survivorship bias, which just means that the the survivors or the winners in history are the ones who get to tell it. That's like kind of where this bias comes from. And that means that people who are successful, they're going to be more loud and vocal about, oh, real estate investing worked for me. I bought it 10 years ago when rates were like 2.5%, 3%, right? When it was a
Yeah,
different climate, when the prices were low and when the interest rates were lower. And so you can't just listen to those people and assume the same conditions apply to you when the world has changed, right?
yeah,
Like literally in the last few years, we saw rates double. So someone who, in pre 2020 maybe got like a 3% rate or 3.5, something low, literally that exact same property is not only higher in price, but the mortgage rate is double. It's like 6%, 6.5% at least now. And
yeah.
you just can't say that one situation that worked out for someone is going to exactly work for someone else. That's like a very quick path to destroying one's finances, in my opinion.
Yeah, yeah, no, I agree with that. I mean, I'm just saying this, I'm nodding because my mortgage rate is 6.875%. Like when people, yeah, I really like that point on survivorship bias. It reminds me back in my 20s when I was trying to start an online business. Oftentimes, there was a common debate about this is like an analogy. It's not super related, but it is interrelated in some way, where people were saying, should I quit my job to focus on building my business, right? And oftentimes
Mm.
people would say, yeah, once I burned the boats, I was able to build a business. Other people would say, like, no, you shouldn't quit your job, right? It's only when you have enough money from your side business to become your main hustle. But I was thinking a lot of this really is subject to survivorship bias, right? Because sometimes you hear like the sexy story of like how I quit my job where I got laid off and within 3 months I had a successful business, right? This is like the 1%, the 0.01% who actually did that, right? And they might conflate quitting your job with why they were successful when in reality they were probably in the right time and place with the right temperament and skills, right? So the same thing goes with the housing thing. Is like when people always say like real estate is always a good investment. I'm like, not really. Like it depends like how expensive things are. What are the interest rates? Like what is your way of monetizing? Like how are you going to make money? Is it to like live in, or are you trying to like rent it out? Like how many tenants can you have? This goes to another side rant I want to point out too. Is oftentimes when people don't run the numbers, I would really recommend if you're modeling, if you're modeling the real estate investment cap, make sure you really run the numbers and validate your assumptions. I'll give an example. Like we wanted to convert the Jersey property into a short-term rental thing, and the broker and the agent said that there were no restrictions on short-term rentals. And I want to confirm that, so I called the city. City government's impossible to get a hold of, really hard, right? So actually, in the meantime, what I did is I modeled it out with like 5 bedrooms, and the numbers were in the green, meaning it was positive, right? Positive profit. Then I actually looked at the ordinance from 2019, and you know what I found? And they made it so difficult, by the way. Like the ordinance was like a scan, it was a PDF document, but it was a scan, it was a PDF of scanned paper documents. So you couldn't like search through it and do
Oh,
like keyword
wow.
searches,
Go
right?
back.
Yeah,
Yeah.
so I eventually read through the whole thing, and it says you can only do 3 short-term rental contracts concurrently. That's basically 3 Airbnb bookings, let's say, right? So there's not like a room restriction, but you can only do 3 concurrent. And if you're renting out individual rooms, chances are people are going to book only one room, right? So I was like, okay, that's not good because we went from 5 bedrooms being rented out to 3 bedrooms. That's a pretty significant profit loss, right? Or decrease. It got even worse, by the way. When we finally got a hold of someone on the city, they're saying like, "Hey, we're revising our ordinance. What you saw was out of date. You can only do 2 bedrooms. By the way, you need a short-term rental permit per bedroom. This is clearly a cash grab because you have to pay per permit, and there's annual fees for each permit, right? So they're just trying to get more money. So we go from 5 bedrooms to 3 bedrooms to now 2 bedrooms. So, anyways, for people that want to run the numbers, a lot of times I would say also you have to challenge your assumptions. Like I take a look at the numbers and say like, what assumptions do you have? Do you have assumptions that you can build out these additional bedrooms? Do you have assumptions that you can rent out these additional bedrooms? Like you have to really understand the city and potentially state ordinance, because if you add enough bedrooms, you can start going to the state territory of becoming a boarding or rooming house, as they call it, right? At least in Jersey. So that's going to have a bunch of laws around it, right? So you could really get into some very tricky situations. And even if you had a lot of bedrooms, maybe for zoning will usually say like you have to have X amount of parking spaces, off street parking per unit, or for how many bedrooms, right? And if you don't have enough of that, then you're kind of dead in the water, right? So I think there's a lot of
Yeah.
nuances
Parking's
as to
everything,
how,
especially for
yeah,
Airbnb guests.
Totally, right? Or just like for long-term rentals, it's kind of like, can you imagine if you take up like two parking spots and then you're like, hey, we don't have parking for long-term rentals. No one's going to want to like really live there if it's a car-heavy city. I guess it goes into like if you don't run the numbers and you don't know these nuances and you don't model it out, you could really find yourself having to pay a lot more money. And for some people, like if they were really just trying to get to closing and the down payment, they might actually not have enough money to cover these costs, and it can really cause a nightmare situation. So I would say for someone that really wants to invest, like a lot of times they just don't run the numbers. They hear these things, and going back to the point of survivorship bias, some people just always hear things from their friends or from like these podcasts, like real estate's always good, real estate's better than like stocks, vice versa, right? But they don't really understand that it's so situational. And because they just blindly believe it, like they might not really assess clearly what the real situation is in front of them. So that's why I always like every time I hear people saying things so dogmatically, I'm like, I always think it comes down to, I hate to say it this way, but usually the answer is it depends. Because people always say, are
Yeah,
stocks better than real estate? But I think it
depends.
really depends. Like, it's like, where are you buying? Where are the interest rates? Like, how many assets do you have? Like, how are you diversifying your assets? So it's just like, it makes my head kind of spin because whenever I hear people say absolute statements like stocks or real estate's better, I tend to honestly internally cringe because like even if they are successful, I'm like it worked for you, but your market and your timing could have been very different. And I think in today's market, especially with high interest rates and high pricing and high housing prices, like in these cities that we live in, right? Especially the more desirable cities. I mean, the number crunching, man, you're gonna have to really work to make the numbers work.
I think the example you gave around the city ordinances and all the hoops you had to jump through with, that property you're looking at, I think that just goes to show the margin of error is now very small compared to before. Let's say even 5, 10 years ago, pre-COVID, right? You could kind of throw a dart anywhere. And if you bought a reasonable home, you probably made money. But those were those conditions pre-COVID. That was
Yeah.
before massive inflation and all this stuff, right? And now when Jeremy says run the numbers, that means that you can't just throw a dart anymore and be like, yeah, like real estate will probably make money, right? It's like, no, you got to do spreadsheet stuff. You got to be like, okay, well, first, not only can I afford it, but can I afford the ongoing cost of this thing? And I want to say something that is like often missed. Um, it like the ongoing cost is not just financial, but it's also mental. So it requires labor to make money in real estate. So anyone who talks about anything being passive income, all passive income has always been made by really active income first. So meaning that like any successful Airbnb host or whoever I met who's in the real estate world, they got systems down. They like made sure to bring fresh towels for their next guest and to get that 5-star review. They had their homes broken into. They had to fix things. They put so much blood, sweat, and tears. And people with that type of personality who like to fix things up and love that, like they should totally go into real estate because that's a rare quality to have. And then it's those people who really love the game of real estate and finances and like rebuilding a place, make it nice, then they make it passive. They got a system, they got like people, they got property manager. It's after a lot of work, then it becomes passive. Just to compare that versus index fund investing, Jeremy mentioned S&P 500, is that it is pretty passive because you just buy it and hold it, and that's it. You don't. There's no renters that are going to complain about you. You could buy a little bit at a time. You could sell it whenever you want to. So the liquidity is much higher. Liquidity meaning that the asset is like liquid, where it can move a lot easier. Whereas a home is like a relatively illiquid asset. Like it's, for some homes, they sit months on the market and, there's a lot of transaction costs involved. You can sell it. But I would just say that there's definitely an underestimation of how much work it takes to now, especially in today's climate, to make real estate work as an investment.
Yeah, totally. It's kind of funny how a lot of people think that they're going to buy a course on like out of state long term property rentals. By the way, I don't have anything against those courses, but I'm like, oh, so you think you're just going to buy the home and like give it to a property manager? Then it's going to be kind of very, then it's going to be like really passive. But like when I see that stuff, right, I'm like, dude, there's like a lot of like upfront labor and costs, and I don't think a lot of people understand that. A lot of things can also go awry, which is another fun topic we could talk about. Obviously, I don't own the property yet, so nothing has gone awry yet. I'm sure in future episodes, I want to talk about all the shit that I go through. But I would say this might be a good segue. Is like oftentimes, especially with tenants, like I've been thankful. Like my parents own property, and their tenants overall have been pretty good. But every time I talk to my parents about like should I own property, XYZ, they always kind of mention like tenant laws and also just like how one bad tenant can really ruin everything or really just kind of spoil your experience with real estate. So I think a lot of people really underestimate how active real estate can be initially. And they can also underestimate how when some disaster happens, which usually it seems like in general, statistically speaking, nothing crazy is going to happen. But usually when you think that, that's when something bad happens. So I think this would be a fun topic to talk about, Oz. Like, have you run into situations where you had tenant issues, if you're comfortable sharing, or you had to run into something that you didn't expect with owning real estate and being like a landlord? And how much did it like drain out of you, or like how taxing was it emotionally to deal with that?
I would say having old home and plumbing issues, and like that was a twofer, like plumbing issues and needing to replace pipes,
Yeah.
and also having unfortunately to cut down a tree. I like that tree, but it was going to kill someone, and that costs thousand like 5K. So I think the risk with homes is that like you could have these sudden big costs come your way, and that's just operating the home. That's not even talking about like tenant issues. And I would say that there's some states that are homeowner friendly, landlord friendly versus tenant friendly. And I want to disabuse some false notions here. On the high level, when they say tenant friendly, that sounds good, right? That sounds like, oh yeah, tenants don't have as much money as like landowners. There should be even more tenant protections. But it creates a bad incentive system because
Mhm.
there
Yeah.
are places where it's so landlord unfriendly, where they give so many rights to a tenant that in certain states, certain counties that like offer so much support where it's always like the tenant is always right. Sometimes you'll find a situation where tenants camp out at a basically this home and they no longer pay for it and they just take advantage of the situation, right? Now, there might be people who are like, yeah, fuck landlords and this populist type
Mhm.
of message, right? But you have to think about things long term is that those landlords, if you make things bad for business and landlords are in a business, they're not going to want to rent or they're
Yeah.
going to increase their requirements to be like much harder to get into their home. I know a lot of people who actually stopped renting
Yeah.
their homes and they took valuable space out of the real estate market because they had one bad tenant that ruined it all for them,
Yeah.
right? So I think there's probably a good balance, but I would say for people who are thinking of buying real estate for investment purposes that really think through the worst case scenario. And one of those worst case scenarios is you having to evict someone. It's like not fun for anyone. And
Mhm.
just figure out how hard is it in each state. Because like for example, Texas and a lot of places in the Midwest are supposedly more landlord friendly. And then like places that are the the big cities, especially the coastal cities, they tend to not be. So I would say that's one thing to like really watch out for is if you're gonna be renting your place to someone, there's a lot of things that you should probably think through, including is the law going to be fair or is it only
Mhm.
going to overwhelmingly favor the tenant? Yeah, there's this geeky term called negative externalities, and that just means bad shit that can happen. And
Yeah.
one of the negative externalities is just surprise costs. And so we talked about tenants, but I want to specifically also talk about condos and apartments
Yeah,
because I've lived in condos and apartments before, like prior to moving back home. I was actually like, a homeowner and a renter at the same time because I wanted to live in Long Beach. So I lived in Long Beach. I had a landlord. I paid her, and so here's like an interesting little game, or things to consider when it comes to condos. Is that um, people will look at condos and apartments because they're cheaper, right? Like instead of having a whole house and a lot, you just have like your condo or apartment in a building that's shared with other people. Now, this is what I started to figure out slowly is that yes, they are cheaper than homes on average. And why would people want to buy a condo is they want to be in a place where that is a more popular area. So for example, Long Beach, you want to you might want to buy a condo that's by the beach because there's no regular homes for sale near the beach. They're way too expensive. So, you buy like an apartment building, and not apartment building, apartment unit or condo instead. Now, because these places are desirable, they're often older buildings that are not as maintained, but they know that people, because it's near the beach, will still want to be there. What am I getting to is that this is hugely risky because there's going to be all these costs of fixing things. And I've seen like multiple friends at this point have to pay out of pocket for by being in a condo, like by owning a condo, because there's these things called special assessments that happen when you're living in a condo. So, for example, my own previous landlord, luckily my unit didn't have a leak, but the other units had this leak where the outside exterior wall, there's something messed up about it. So during one of the rare rainy seasons, a bunch of water came in and flooded, like semi-flooded part of this side of the building. So one of my neighbors actually had a hole open in their living room for half a year, right? So in order to fix that, like when you're in an HOA, homeowners association, what they do is you basically have less control over the sudden costs that can happen. So all of a sudden, my landlord and a lot of people and every other landlord in that building had to pay a $30,000 special assessment fee. And I'm not. That was 30, like
wow,
$30,000, right? And that was actually only one of two special assessments this building needed to do because there was also a roof thing and like another thing, right? And so it's kind of like a messed up. Like it's almost like you're trying to dodge bullets because it's like, all right, I can't afford a home in the area that I want, so I'm going to buy a condo. Oh, the only condos that are affordable that are near the area I want to live are in old buildings. Oh shoot! Not only do these old condos, every single condo charges an HOA fee that I have to pay on top of monthly, but something crazy could happen, and they're just like, we want the newest metal roof. That's 10K a person, guys, like cough up.
yeah,
Like I saw that condos and especially old condo buildings is a threat to your financial independence
yeah, yeah,
because out of nowhere it could be tens of thousands of dollars. They're like, sorry, you have to pay this now,
yeah,
and you really don't have any control over that. So
yeah.
that's a scary thing. So be extremely careful if you're gonna buy a condo or apartment unit in an older, not well maintained building.
Yeah, I'm not gonna lie. I know we kind of talked about it in passing, but we have friends that buy condos, by the way. But like, I honestly wouldn't do it myself personally because it's what you mentioned, and I've heard the same thing. Friends that buy condos, there's always some sort of shit going on, or something goes wrong. Like there's always some sort of leak. There's always some sort of like wall that's like leaking or kind of crumbling or like not structurally sound, and all of a sudden they have to pay like thousands, right? I think this is a very consistent theme. Maybe it's just the way condos are built in LA, by the way, but there's always something going on. First and foremost, the number two thing is just the HOA fees. Like, why would I want to pay this? I'm gonna put it usually useless organization that tells me what I can and can't do with my condo or my property, and they don't really do anything, right? But you have to pay them every month. It makes no sense to me. And I'm saying this too, by the way, because my co-buyer and co-investor in this single-family home that I bought in Jersey, we did look in Manhattan. Obviously, it would be ideal to buy in Manhattan. Unsurprisingly, prices there are
If the price is
super
right.
expensive. So
Yeah.
we're thinking, can we make this work with like house hacking, with building like a bedroom for renters? And basically, what we found is that Manhattan is not as friendly towards short term rentals versus Jersey. So we started looking in Jersey City. Now, here's the thing, just because Jersey City and the ordinance is friendly towards short term rentals doesn't mean that it's easy to get one because then you go into like you go into like the individual apartment complexes which have HOAs generally speaking, and the HOAs might say no to like having like short-term rentals, right? Which makes sense, right? You don't want random people coming in and out. So even though a city is friendly, the actual unit itself or the apartment complex with the HOA may not be friendly towards it. And I was thinking there came a point where we're thinking like we have to probably just buy a home because with all these laws and all these HOAs, and in New York City they have these things called co-ops where you can get like a pretty cheap apartment. I mean, it's relative to New York City, less expensive, right? But it's a co-op, and co-ops are basically like an HOA that's community owned. But they're probably going to say no to like Airbnb, right? So it's kind of like you have another person or group looking over your shoulder telling you what you can and can't do. So this is another rationale as to why I bought a single family home with my friend. But going to your point, like I honestly think that would be a great video or email newsletter title, like how like condos are a threat to your financial independence, because every time I hear about it, and every time we heard about it from friends, there's always something going wrong. There's always some sort of weird, unexpected cost. There's then to add to it, right? If the HOA fee, let's say in LA, is like $500 a month, it's probably more, right? But I want to calculate this stuff out. I'm going to do this live. I can't do math like off the top of my head, but I'll use the calculator thing.
As Jeremy's doing that, I think what he's getting to is that you should consider the HOA price into the price of the home.
Yeah,
So, like, if you buy a $500,000 single family home where you don't have to pay HOA, an apartment that costs the same amount, $500,000, but they charge $500 a month, that's more like a $700,000 home. If you bake in the HOA payments into what your price would be, paying like a normal mortgage on a single family home. So, I'm not anti condo. I'm anti anything that is going to be a threat to your financial freedom, and that is, buying something that's really going to be a toxic asset. you know
yeah.
it's going to cost you a lot, it's going to be old, it's going to cost you stress, and you have to like fix things, or there's some special assessment that comes out of nowhere. Those things suck. Like, I don't want anyone to go through that.
There is this debate, I think, online where people say like, stocks versus real estate, which one's a better investment? And we all know it depends on like, what stocks you invest in, like what market you invest in for real estate, what is the interest rates and stuff like that. But what's your perspective on how you would help a coaching client approach the situation? Because I could see someone saying like, hey, should I put this money into real estate, or should I just keep it in my index funds and just wait for it to grow and compound over time?
Yeah, I think that people are going to fall in different buckets. So I'll take into consideration where someone is in life and what their goals are. So, for example, if they're young and fresh out of college and they're just wanting to start building wealth, I'm gonna be telling that person, hey, start this habit of index investing. It's low cost, it's cheap, and it has this reliable pattern of growth that's supported by stock market history. So about between 8 to 10% a year. This past year is like 25%. Crazy, right? So it might be negative 10% next year. Let's hope not. But anyway, so there's that type of person who's like, hey, I just want to build wealth. Um, and I think as people go through different life stages, their goals change and they might feel different pressures, right? And I think one of the pressures people definitely feel is when they like, I think a lot of things line up to life events and the pressures that we feel. So big life events are marriage, like moving, marriage, and kids, right? And like career too. So usually people who like get married, one of the things that they want to do emotionally is, oh, that's like buy a home. That's like create a home for ourselves, right? It's a totally valid emotional reason, but people should really think through that. Then and if people don't buy a home then, what will really spur them to have a home is when they start having children. And that is usually going to be, they're going to be thinking about safety a lot. So with my partner, we want to have kids like years down the road. And I know that at that point I'm probably going to make not a financially good investment, but I'll probably end up buying a home for safety and for the other benefits of having a home, obviously, which is like, you want to grow a family, you want a yard, if you have a dog, and, things like that, right? So I would say that the best advice I could give to people who are considering buying a home, it's really get clear on the context of your life, like where you are, your goals, where you want to be in your life stage. And I think that's a better guide than feeling a bunch of pressure from watching social media videos on how to get rich. And maybe they're making you feel guilty for not owning a home when you're 13 or early on in investments when you're in your mother's womb, right?
Yeah, but I will say to the audience members listening, you should have probably started saving when you're a kid or a baby. Should have put it into that piggy bank, right, and let
Yeah.
it compound.
Yeah. It's your fault. You didn't start
Yeah,
saving when you were in preschool.
yeah, I should have read Rich Dad Poor Dad, but it's oh, actually, this reminds me of a question. Like, and this is something that I did personally. I don't know if I would recommend it to most people, but would you recommend someone to draw money from their 401k to help with, let's say, with the closing costs or down payment? Because I did draw a little bit of money from my 401k. That's obviously very particular to my situation, but imagine a client hypothetically is like, hey, I really want this home. Here's a reason why, but I have to use some retirement money. Like, what would you say to them?
Oh, yeah. I think I would go back to that model I gave, which is what is your current situation? What are your goals? Because if someone just asked me point blank, I would say probably 80% of the time, I would say not favorable. Like if you're in a position where you feel like you're forced to liquidate from your 401k or retirement account, on average, I know nothing else about the person. I would probably be like,
Yeah,
ooh, that's something to be careful with.
yeah,
But if you know what your goals are and things line up where there's an opportunity to go into business with a friend, where you guys have some expertise to make this investment into something that works, then I'm going to say something different. I'm like, okay, you guys have done your homework. I think the question is, have I done my homework? House is like one of the biggest purchases that anyone would make in their life, right?
yeah.
Am I approaching this purchase consciously? And let me really evaluate my goals and what I'm willing to lose and gain, and then kind of be very grounded from there and be real with yourself.
There are some ways around it for the tax law. For your traditional IRA or IRA, you can withdraw up to 10K penalty free for a first time home buyer. The other option is for your 401k, which I don't recommend, is you can borrow against. I think for your, you can kind of have a loan against your 401k if you're a first time home buyer. I don't recommend it though because it sounds good in theory, but let's say you withdraw 20K and you have a loan against your 401k. You basically have to pay 20K. You have to pay back the balance of what you withdrew. And that money that you pay back, there's also interest too on the money that you withdrew. That money does not go back into your 401k balance. It makes no sense to me actually. Like you're paying 20K to use the 20K that you had, and only the interest that you're paying on the 20K that you withdrew as a loan from your 401k goes back to your 401k balance. So I would not recommend that. Although,
Oh, I
if
didn't
I'm
know.
wrong about it, yeah, I thought it'd just go back to the 401k. I was like, this is great, right? Nope, doesn't go back to your balance. The other option I've heard, I'm not doing this myself, but I heard is you can roll over your 401k to a self directed IRA, and then you can basically withdraw from the self directed IRA to buy property without penalties. But there's a lot of preconditions, by the way. This is where people get wrong, right? They're like, I saw on social media, I'll be fine. But there's very specific criteria. I don't know it off the top of my head, but I think if you buy it and you use that money, it has to be investment property and you probably can't live there. I could be wrong about that, but the point being is like there's very specific guidelines as to how you can use that money, and you have to make sure that you follow it. Otherwise, then the penalty applies, right? So I think a lot of people tend to just have all these, especially when they listen to real estate influencers that like give them like something in 30 seconds, like 1 minute, right? They're going to say like, oh, I can do this myself. Yeah, I can avoid penalties. It's like, not really. Like, have you really like read the laws? Have you like really made sure you understand the edge cases? Most people don't really go to that detail, right? They just kind of jump the gun. And I think that's actually that impulsivity and that kind of desire to get rich or get a home, right? It really blinds them to how intricate the tax laws can be. Now, if you know the tax laws and you know how to play the game, obviously you can benefit from it, right? But I'll give another example. A lot of people say like, I want to buy this property, then I'm going to flip it. And the difference between the selling price and what we flip is going to offset and that's going to be our profit. But I was like, do you know about capital gains? Like, it's just like there's going to be a lot of taxes, right? And I think a lot of people really discount all these details. And a lot of people say, like, well, I have tax savings. I can depreciate the property over 27.5 years to get like an annual depreciation like rate, of like getting a deduction. But I'm also saying you do know that when you sell the property, there's a depreciation recapture tax. So
You have to
that
pay that
it's
back.
almost like it comes back. Yeah, it's almost like there are ways around it, kind of, right? But the point being is like a lot of people just, I think honestly, they're just not aware. They just don't do their research. And again, with a huge, huge investment, I would recommend in general, if you have a huge investment and you're just jumping the gun because you have this like fear of missing out, I would say, generally speaking, from my experience, anytime I made a very rushed purchase, it was usually the wrong purchase. Now, obviously, there are exceptions to the rule. Some people did buy really quickly, and the housing market went crazy. They made a lot of money, stuff like that, right? But I would say, I mean, what are your thoughts on that? In general, if you feel pressure to do
Yeah.
something, especially a huge purchase, and then you make that huge purchase, I would say, from my experience, generally speaking, it has never netted positive. Now, it may not work. It may work
Yeah.
for some other people, but
There's friends, mutual friends of ours, and actually, I'm gonna repeat the advice that I gave them. And this is now supportive on the side of home buyers. Like, I'm totally not against it if it makes sense for you. This friend has basically been thinking about buying a home for the longest time, but is complaining about how much it's gonna cost and whatnot, right? And this went on enough for a while where I was like, well, you're saying that everything costs like $1 million, but have you looked on Zillow? Because I check Zillow very often. It's kind of like a distraction hobby for me. And you could find places that are not $1 million in LA. I was really encouraging this person, hey, like, just start going on Zillow and creating what is called a buy box, which is what are the parameters in which I'll buy in? Like, the cost of the house, the area, the zip code, is it 3 bedroom or 2 bedroom? Your buy box is what fits in this box that's okay for you to buy. And then the second thing is start talking to a real estate agent because you're actually going to learn a lot through the process of trying to buy something. It's better to start that process earlier rather than later. Like earlier before you feel like you have to buy a house, because imagine
yeah,
someone who's like, is familiar with a real estate agent, kind of knows all the terms and all the questions they should ask a real estate agent, all the questions that the agent's going to ask them about their finances, so that when they are ready, they're not going to feel rushed. They're not going to be like, oh, wait, he's asking for another document. Oh, what is this? Should I trust them or whatnot, right? If you think you want to buy a home, it costs nothing to start talking to a real estate agent. A parallel is like, before you're ready for a job, just start interviewing. That recruiter that hit you up on LinkedIn, be like, yeah, you know what? I like my job, but let me just talk to you so
yeah,
that you are more prepared for the landscape of what the job market is like, so that you're more prepared for what buying a home is like. I agree with you. Like, you shouldn't make a rush decision. That term FAFO, around and find out, right? Talk to a real estate agent. Get those
yeah,
conversations started. Go to some open houses, right? Because
yeah,
the same friend who was complaining to me about how homes cost so much and there's like no chance has not gone to one open house.
yeah.
So I'm like,
It's really big.
I don't
Yeah,
really know like what you're complaining about here when you have so little information. And so maybe the quote there, because it's real estate, is get real. Don't let it be a figment of your imagination. Get real with the numbers. Get real by literally entering the home. Get real by driving to the neighborhoods that you're willing to explore and live in. I would say one more thing is that a lot of people overestimate how long they're going to be in a house. Maybe this is just pre-COVID data. People are staying in their houses longer because houses are so expensive now. But I saw some crazy stat that the average time in which someone stayed in a home before they sold it and moved on was 5 years. I think that's also a really good question to ask yourself, which is like, okay, with this decision in which I'm going to plop down a lot of money and I think it's going to be forever, how long do I realistically think I'm going to be here? Like, is my career very mobile and really wants me to move potentially? Do I feel like I have roots here? Because most people will reap the benefits over the long term of their real estate by holding that house long, just like you do with stocks or almost any asset. And if you want to make money on a shorter term basis, that means you have to really improve that property, rent it out, or do something to monetize it. Yeah.
yeah. I do want to comment on what you mentioned earlier about getting real. There are some people, I think, which is correct. I'm going through puberty. There are some people where they need to just trial run it, like go visit properties, talk to brokers and agents, like really see what the process is. Uh, this concept actually is very near and dear to my heart because I'm someone who very much is very analytical, and I think people that are very analytical sometimes they stay on the sidelines, right? They're always waiting for the perfect opportunity. I think the best way to learn, in the case of real estate too, by the way, is just learn by doing. Go out and do it. Talk to some agents. Go to some like open houses and stuff like that, because you'll learn so much through that process itself. Also, the good thing about it is if you do these trial runs, when you actually find a property that you really like and you want to pull the trigger, by that time you have the experience, right, of going through the process, and I think that'll make it a lot less overwhelming compared to if you're just doing it like fresh. So yeah, I would say if you're kind of curious about buying, don't just kind of sit in this theory box of like looking for properties and just like sitting and looking at Zillow and the MLS and like not doing anything about it. Just go out there, get your hands dirty. You'll learn a lot. And I think that experience alone will be very valuable because when the time comes to actually pull the trigger, I think you would have accustomed your body and your actions and your nervous system to actually take action versus, like I think for a lot of first time home buyers, right? It can be very, very overwhelming. I was lucky too because obviously my friend, he's flipped a few homes, so it was a very, very simple process. But I mean, if you've seen how long some of these legal documents are, a first time home buyer, I could see them getting very, very
Yeah,
overwhelmed. So I would say it's better
it could
to
be very
start, and so, yeah.
absolutely.
So
And I would also add that in terms of getting real, like you did this to the extreme where you're interested in New York for lifestyle reasons. And so you actually visited New York,
yeah,
right? You rented an Airbnb, like you actually experienced what that place was going to be like. And I would say people who are maybe interested in out of state real estate investing, you should absolutely do that and copy Jeremy, which is, oh, maybe it's Denver, maybe it's Smoky Mountains, wherever, right? Like, luckily today we have Airbnb and VRBO. You could go and do that experiment, which is like, let me like remote work out here for a week or two, or maybe use my vacation on this. Let me actually get real by being on the ground and thinking and seeing, oh, do I actually like this place, this neighborhood, this area? How does it feel? Versus just kind of like, yeah, letting it all be stuck in your head and just like only consuming content on the internet.
yeah, I agree. There's a point where, theory is great and stuff, but you have to actually get your boots on the ground. A lot of times, things that sound good in theory, when you're actually there in reality, reality is the best teacher. Also, you'll find out a lot of nuances too of a place too. Like, when I was visiting Jersey as well as New York, there's a lot of nuances. I actually, funny thing is, like when I went to New York first, I was there around 10 years ago. I did not like the place. So if you just told me like a few months ago, like, hey, you're buying something close to New York, I would have been like, no, that's not true. Like, I hate that city, right? But I think actually by
Yeah.
going and doing it and living and actually seeing like the layout and the people too, right? I think I was able to make a better decision. So I do think that sometimes this is going to psychology, but I do think some people that are very theoretical and very intellectual, I can relate to that. But I do think it is a little bit of a defense mechanism to just be behind your computer screen and just like looking at prices and looking for that perfect deal, because it's safe. Like you don't have to leave your home and you don't have to really do anything. You don't have to talk to anyone. You don't really need to put anything on the line. But I think when you actually put stuff on the line, or actually, you can do these safe experiments of talking to an agent and like going and visiting. I think that actually will yield a lot more insight versus stuff that you could just like read online.
So a more personal question, Jeremy. I was curious. One, why New York slash Jersey? Like, what is it about that place? Aren't those expensive cities? And also for the price you mentioned, like 650K, can't you find those opportunities in California? Like, I check on Zillow. There's certain neighborhoods in LA that's within that price range, broader California. So I'm curious about like why New York and why buy real estate there for you.
Yeah, so the real reason behind it, and actually Oz knows the real answer, is it's because of dating. Long story short, I'm in my mid 30s. I would love to find my future wife. And I have found, and I've traveled quite a bit to around like 33 plus countries. I have found that dating is usually an internal and external game, right? Oftentimes, people that complain about dating where they're at, usually they have inner work to do, and I am no exception. And at the same time, I would be remiss to say that your environment doesn't matter because when I've traveled, I've noticed there were dating and cultural differences depending on where I traveled, right? And I actually found that, dating in New York or just dating in a different city outside of LA actually was easier. So for me, it's about swinging the odds in my favor. This is really an experiment. Did I have to actually buy this home to date in New York? Absolutely not. Would I recommend it? Probably not, actually. Like, it's kind of funny that we're talking about real estate, but I would say if someone really wants to test this out, like, let's say if you want to enjoy a city for its location, for dating, whatever it may be, you can go out there and rent and test it out a little bit. You don't have to do what I did. So I would say I definitely, it's kind of funny that we're talking about why I bought property, but that was the main or one of the main drivers. I would say in general, would I recommend someone else to do the same thing? Probably not. But I will say this though, the other reason why I bought in that area is it's a good market because everyone is trying to go to Manhattan, right? But what I found in real estate is just generally speaking, as things become very expensive, people tend to expand outwards. And where I bought is literally across from Manhattan. I'll put it that way in Jersey. So you guys can probably figure out where that is. And I would say that area has also appreciated. So it was partly strategic for like the housing market and being able to flip it down the road potentially. But it was also partly to, increase my dating opportunities. I will probably talk about this more down the road in my channel. So we'll see what happens there. But the third reason actually too is just to, as a whole, diversify my assets. All my assets up until this point have largely been very liquid not in real estate, in index funds and my investments. So I would say this is honestly, it's a kind of like an experiment. It is kind of stretching me a little bit beyond my comfort zone, but I am kind of just trying this out to see what happens. It could go honestly very horribly, or it could turn out really great or mediocre. We'll see what happens. But it is a way of me to diversify my assets and see what happens and run this experiment. In general, I think it comes down to if you're planning to buy a home, especially across the country of where you live, definitely visit and make sure you have the right reasons for doing it. And as mentioned earlier in the video, absolutely run the numbers. Like really, really run the numbers. The other thing I would kind of spiel on about to really make sure is understand what your off ramp is. Let's say you buy that property, you live there, you freaking hate that area, and you want to move. Like, what do you do then, right? Do you sell it? Is the market overall going up? Like, are you going to keep renting it out? I would say know what your exit plan is. And going back to the city ordinances and like laws, be careful if you're renting out the place because there's places where if you're thinking, oh, I'll just do short-term rentals and hire a property manager. But certain cities like Jersey City, if you want to do short-term rentals, it has to be owner occupied. So if you leave, you can't do short-term rentals unless you want to do it illegally, which I would not recommend. So really understand if you're going to do something as crazy as what I did, really understand the economics of it, the rationale, and understand if things were to go awry, what would you do then? And this is where, running the numbers, but also really understanding the rules, the ordinances, and validating that by directly contacting the city or whatever governing body is like in charge of it. That will really allow you to de-risk things. So that's a long-winded way of saying it was for dating, but it was also a way of kind of just trying out something different with my finances. And I also did make sure I had good off ramps down the road if things turn out to be a place where I'm like, you know what, screw this. I hate living in the East Coast. I want to go back to California. So we'll see what happens.
So that was dating and dollars.
Yeah.
Driving factors.
Money, and one woman.
Yeah. Wealth and women.
Yeah.
I like a good alliteration. Well, thanks for sharing that.
Yeah, no problem. So, Oz, thanks for being a special guest on the show. I think, your wisdom and experience with money and the insights that come from it are always very welcome. I love having these type of episodes because we can really just kind of riff on things that are on our mind versus me just kind of talking to the camera for like 10 minutes or 20 minutes. So for everyone that is not familiar with your work and your, basically your brand, how can people find you and learn more about you and work with you?
Yeah, so ozchen, that's OZCHEN, just about everywhere. So ozchen.com is my website. And that's also the name of my YouTube channel. So it's like youtube.com/@ozchen. And so, yeah, I do free financial reviews with people, especially if they're willing to do a testimonial for me. So that's my service to the world. I don't make money from this. I am like a fintech designer by day, but like a money coach by night. So if you want to talk to someone about money, but not just like money and budgets, but also like the psychology about money, how you feel about it, struggles that you have, that's where my passion is, to really help people feel better about money. So hit me up. Once again, that's ozchen.com.
All right. Well, everyone, thanks for tuning in. Take care, and we'll talk to you all next time.
Peace.